Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Asian stocks track a tech-fueled rally on Wall Street, but there are concerns the Fed may be less dovish than previously expected following the slight rise in core CPI. And we'll be watching out for the ECB decision due this afternoon. Israeli airstrikes continue in Gaza, with reports a UN school sheltering displaced Palestinian families is amongst those hit. The IDF says it was targeting Hamas militants operating from the school. Plus, China's dealmakers in the crosshairs, Beijing turns up the heat on state-owned brokers scrutinizing IPOs and detaining investment bankers. It's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, yesterday, all the talk was about how that U.S. inflation number would come through, whether it was going to cement the case for 50 basis points. Well, it did turn out to be quite impactful, but not in the way we imagined, namely because on the back of it, the market dialed down their expectations of a 50 basis point cut next week and are now fully pricing in a possibility of 25, less so 50. The numbers coming slightly higher than expected on those services components. So we'll talk more about that shortly. But what we did get is actually a bit of a rebound in the S&P, ending up in positive territory yesterday for both the S&P and the Nasdaq. A tech-fueled session yesterday. Nvidia climbed 11% on the day yesterday, so quite a volatile stock, but again, tells you about some of the positive sentiment coming back into U.S. markets here, led by tech. U.S. futures pointing to a 10% higher today. Nasdaq about a 16 basis point move higher in futures. Euro in focus as we head into that ECB meeting. Again, the market is pricing in a 25 basis point rate cut, but big questions about forward guidance. Will Christine Lagarde, ECB president, open the door to further interest rate cuts, or is she going to hold their cards close to her chest? So a big question for investors today. And then Brent, again, a lot of activity around this. We had the inventories numbers come through in the U.S. slightly higher than the market had penciled in. That was a catalyst for another downtrade in oil. But then later in the afternoon, as Storm Francine hit the Gulf of Mexico and started to make impact, we saw a 2% rebound. So more volatility still in the energy complex. Brent sitting at around $71. But let's just talk more about those inflation numbers. And just to show you here that even though the headline number came in line with expectations, the core coming in line with expectations, a lot of people are pointing to the fact that this services print, the core services annualized figure, has still come in at 2.9%. So compare that to the downward pressure that you're getting from core goods, minus 0.4%, and that paints the picture for you. Goods is very much in deflation territory. Services still quite sticky when you think about those numbers. All right, let's check in also on how markets in Asia are faring. Avril is in our Singapore studio. We had a risk-on session for Wall Street. Looks as though it's a risk-on session for Asia as well.
Indeed, it is a tech-led rebound. Asia stock gauge headed for its first positive close this week. And this is thanks to the likes of the Nvidia chief highlighting how limited supply is, how strong demand for its chips are. So you get the sense that that's dragging up all these semiconductor-related stocks in the region, including TSMC among the big boosts for the MSCI Asia Pacific. Nikkei also seeing a surge, managing to snap a 7-session losing streak, and this is against the backdrop of slight weakness coming through on the Japanese currency. It has lost some of the gains from earlier in the week. Of course, this is after what we got on the core CPI number out of the US. We also had data from Japan today, so maybe not so clear-cut in terms of where the Japanese economy is and how much rate hiking we can expect to come. Those yield differentials really at play today. Jumana.
Yeah, absolutely, and definitely one that investors are going to be focused on when you think about the trajectory of FX. So we're going to be talking with a guest about that later on in the show. But let's just recap what we got out of the U.S. yesterday. Underlying U.S. inflation unexpectedly picked up in August. And you say underlying, you mean core, undercutting the chances of an outsized Fed rate cut next week. Meanwhile, stocks in Asia did rise on Thursday, as Avril was just highlighted, as a tech-fueled rally on Wall Street spread across the region. Let's bring in Manpreet Gill, Standard Chartered Wealth Management, CIO of Africa, Middle East, and Europe. One thing that I thought about yesterday is the last couple of weeks, the narrative in the U.S. has changed around the Fed being a lot more labor market centric now. They're focused on the data that's coming through from the labor market, less so on inflation, because there seems to be this view that inflation is heading back to 2%, no matter what. Yesterday, we got a small uptick. We got a small upward surprise in that core inflation number. Are markets being too complacent about the possibility of stickiness of inflation from here onwards?
No, absolutely something we need to keep a watch on. But I think where markets are getting their comfort from is, look, we might get a little bit of an uptick here and there, but that's balanced by the fact that Fed rates, real Fed rates ahead of inflation, they're still quite high. And not because, obviously, the Fed rate has remained unchanged as inflation has moved a lot lower from where we were a year and a half ago. So I think from that perspective, I'd be less worried about, the inflation complacency. We tend to agree that the labor market is becoming disproportionately important because actually, even for inflation, I think the labor market will define whether, we're on the path to lower inflation, slower growth, or whether there are some underlying risks.
Yeah. So if the Fed do end up cutting 25 basis points next month, do you think they will have to sound dovish then to appease the market and market expectations?
Well, to some degree, I mean, just given how much has already been priced in by markets, the Fed would almost have to meet those expectations. Otherwise, they'd risk sort of being interpreted in a more hawkish than expected way. But at the end of the day, look, I think the signal from Jackson Hole was pretty clear. I think the fact that the Fed is willing to cut rates, a lot of Fed policymakers since the time have supported that move. It's unlikely to get a dramatic surprise. I think the real question is how we balance markets pricing in a series of rate cuts, potentially 150 bips cut along the way, versus obviously a smoother pathway of just 25 at each of the remaining 3 meetings this year.
Yeah. Do you think the rally in equities is running out of steam? It certainly has been a challenging couple of weeks for the S&P, for some of the tech stocks. But then yesterday we got another tech-fueled rally. So I just wonder where this leaves us.
I think, in our view, the real risk is that we get some volatility in the short term. And I think volatility is more two-way. So we may have sort of these, one day up, one day down, perhaps a bit of a pullback. I think whether this is just temporary volatility or whether, the rally is running out of steam, it comes back to the labor market. Because the earnings expectations picture by itself is still pretty optimistic. It supports the view that as long as the economy is okay, markets can grind higher. I think it's about what chances the market assigns to that downside risk of growth really slowing more than expected. I think that's the only thing to worry about. Otherwise, earnings tell us, in our view, that markets, can move higher, even if it's a more volatile path.
And as a house, are you in the soft landing or hard landing house?
So we're still in the soft landing camp.
Sorry.
So still very much in the soft landing camp. We think that's still achievable. And if you think about the labor market data, inflation, it's supporting that. Growth is slowing, but it's about keeping nose above water. For equity markets to continue grinding higher, we think that's still the most important thing. No doubt downside risks are creeping higher. But at the end of the day, we still think that the chances are still low.
I just wonder if the slowdown in the U.S. economy is actually going to start to bite now. Again, looking at some of the commentary coming through from the financial space, the likes of David Solomon warning about trading activities levels going down. You have Brian Moynihan also warning about, again, some impact to be felt on investment banking front. You had Ally Financial the other day also talk about a potential pickup in delinquencies. So it feels as though bottom up now, credit issues are beginning to pop up.
No doubt they are. And I think it comes back to the fairly narrow path to a soft landing because there's not a wide gap between things getting rapidly lower. But I think regardless of a macro forecast, that's why from a portfolio perspective, we have become much more balanced. We think it's no longer a slam dunk, equities move higher in a straight line. What will be hard is to separate, what might be short-term volatility, which is our view, from, markets worrying about something much worse. In our view, the way to address that is through the portfolio. That's why we've trimmed our equities overweight. We've had a great year so far, and we've reallocated a bit more of that to gold. We think that's a good way to ride out this period of uncertainty. There are risks to watch. We still think the baseline can still be, a soft landing picture, but it makes sense to be a little bit more prudent, a little bit more diversified in investment allocations. How much of the
direction of gold is going to be determined by what happens to the USD from here? Because another, I would say, somewhat consensus position right now in the market is to be bearish the USD. If that doesn't play out, how does that impact gold?
Well, I think the dollar, it's interesting. Despite that consensus, we still think it hasn't broken firmly lower. We're still in the post-2022 range, even though it seems to be trying to move lower. In our view, what's interesting about gold is the relationship with bond yields. That started to reestablish. And to some degree, they're a similar trade. But we think if bond yields continue to grind lower, that, together with central bank demand, can be the source of support for gold.
Specifically real yields.
Real yields, yes.
So you need the Fed to start cutting. Okay, great to chat to you. Manpreet, thank you so much for coming on our show. Manpreet Gill, Standard Chartered Wealth Management, CIO of Africa, Middle East and Europe. Well, still ahead, reports of more deaths in Israeli airstrikes in Gaza overnight, while ceasefire talks stall. We'll have the latest from Jerusalem next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. In the AP latest reports out of Gaza, hospital officials say Israeli airstrikes overnight and Wednesday hit a UN school sheltering displaced Palestinian families as well as 2 homes, killing at least 34 people, including 19 women and children. Israel said it was targeting Hamas militants planning attacks from inside the school. The war in Gaza is now into its 11th month, and international efforts to mediate the ceasefire have repeatedly stalled. So for more on this, Bloomberg's Dan Williams joins us now from Jerusalem. Dan, in what has become almost a weekly occurrence, Israel has bombed the school in Gaza, this time in southern Khan Yunis. Can you provide us with more details?
Well, indeed, this has become a weekly occurrence. It's worth recalling that the war is almost a year old, and pretty much from the outset, schools were shuttered in the Gaza Strip, as they tend to be in war zones, and then converted to makeshift shelters for displaced people. Israel says Hamas has been using many of these schools as hidden command and control bases. It says that when it attacks the schools, it aims to go for the specific rooms where those alleged commanders are. However, as we've seen in this case overnight, oftentimes civilians are also among the casualties.
And another big story that we've been monitoring the last couple of days, Israel's coordinator for Gaza hostages said in a Bloomberg interview that Hamas leader Yahya Sinwar might be allowed safe passage out of the war zone as part of a truce. What is the significance of this?
This is an offer that the Israeli Prime Minister Netanyahu first aired about 2-3 months into the war. It was now reasserted by his chief coordinator for hostages in an interview with Bloomberg. I think what Israel is trying to do here is bridge what appears to be a logical gap between 2 of its war aims. One is to dismantle Hamas, actually to destroy Hamas in the Gaza Strip. The other is to negotiate with Hamas on a freeing of hostages held by the group in Gaza. Now, logic would dictate, why would a group that's facing destruction negotiate over the terms of the destruction? So I think what Israel is doing here is offering a third way, basically telling the Hamas leadership, destruction of your organization does not necessarily mean your own physical destruction. You have literally a way out here, a way out of the Gaza Strip, a degree of immunity if you close the deal. It's also worth noting that 2 weeks ago, Israel discovered the bodies of 6 hostages shot dead in a tunnel where they were held. According to Israel, they were executed by their Hamas captors shortly before Israeli forces could reach them. So it's possible here on a more tactical level, Israel certainly does not want a repeat of that incident. And it is saying to specific captors, listen, whether this incident was panic, whether it was premeditated, think about it next time. If there's another case where you're holding hostages, you hear soldiers approach, you may actually be able to cut a deal with Israel that would secure a degree of freedom for yourself, freedom outside the Gaza Strip, if you give yourself up, surrender, and return those hostages. So there are both strategic and potentially operational tactical aims in this offer.
Yeah, and Dan, yesterday we all were listening to the presidential debate that's going on in the U.S. between Harris and Trump. There were a few lines about the ongoing war in Gaza. Harris was very vocal with the need and the desire of the U.S. administration to get that ceasefire proposal across the line. How do you think the Israeli government is watching the U.S. political developments from here? Is it going to move the needle either way, whether it is Harris or it is Trump as next U.S. president?
I think the election is very much on the mind of Israeli leaders. I also think the Gaza war is very much on the mind of the candidates in the U.S. election. This will not be stated openly by either government, by either administration. I do think that Israel will be especially conscious right now that the Biden administration or potentially the incoming Harris administration could really hold up a Gaza ceasefire, if such is achieved, as a sign of a success of its foreign policy efforts ahead of Kamala Harris's bid to become the next U.S. president. I do think the Israelis are thinking more immediately of the condition of the hostages, of warfighting aims on various fronts. But I imagine there are some calculations within Israel as to what the future will hold if it should be a Trump administration come January rather than a Harris administration. Again, given the sensitivities of meddling in the internal affairs of either country by the other country, no one will state this openly. But I think certainly that is one of the ticking clocks on this war, and it's a war that's moving very fast on several fronts.
Yeah, absolutely. Bloomberg's Stan Williams, thank you so much for getting us up to speed on all the events there. Now, dealmakers in China are finding themselves in the crosshairs of authorities. At least 3 investment bankers have been detained since August. Meanwhile, some state-backed brokerages are said to have asked staff to hand in passports and seek permission for travel. Our chief North Asia correspondent, Stephen Engel, joins us now. I'm just going to repeat that. 3 investment bankers have been detained since August. What is going on, Stephen?
Well, there's been a chill cast across the investment banking and brokerage industries, financial industry as a whole in China, not only, of course, because deal-making, cross-border deal-making, internally deal-making has ground to a halt, really, in this slowdown. And, of course, the stock market has not been performing well, so profitability at brokerages has been really suffering. But also keep in mind there's been this more than 3-year-long common prosperity theme program espoused by President Xi Jinping that has mandated salary cuts at places like CITIC Securities, the big investment bank CICC cutting top bankers' salary by 40%. There's been a clawback. I wouldn't say necessarily that it's a state-mandated clawback of bonuses and some salary, but that is happening. There's a massive crackdown. State media has talked about hedonistic behaviors of investment bankers in China. They want them to abandon pretensions of being part of the so-called financial elite. So there's purely or surely a sort of ideological push to crack down on investment banking. But this latest development is more interesting because it's an investigation, according to sources, led by the anti-graft agency in China. So anti-corruption authorities are investigating I would assume, supposed malfeasance. We don't know what malfeasance or crimes are potentially been held, but you're absolutely right. At least 3 top investment bankers have been detained. We had one of them flee China a couple of weeks ago, according to the sources. He was repatriated, I would assume, under investigation. All bankers and brokers, I should say, have to hand in their passports. That is extremely rare because top executives at state-backed brokerages and banks, they have to hand in their passports, but not the traders and more junior employees.
Yeah, what I find interesting about all these developments is the backdrop to it is Chinese equities have really struggled in the last couple of months to get a sustained bid. There are questions about whether money can come back in. And with situations like this occurring, it's obviously going to use your words, send a chill through the market. And the financial services industry is worth $1.7 trillion in China. What likely reverberations will it have on the broader industry?
There's tremendous reverberations. But again, keep in mind, in this era of Xi Jinping's rule, there have been a number of crackdowns, whether it's on the platform economy like Alibaba, or whether it's on online education, obviously on property. It doesn't necessarily matter about the consequences. There are intended and unintended consequences. So obviously the authorities are looking at ways of cleaning up what they feel is bad behavior within this industry. The sources are citing essentially, they're looking into possible malfeasance into IPO listings as well as other fundraising by corporates. So we don't really know the exact nature, but we do know if the anti-graft agency, essentially anti-corruption agencies, are looking into this, it's coming from the top. So again, it does cast a pall at a time when the markets are down, trading is down, deal flows are down.
Yeah. Bloomberg's chief North Asia correspondent, Stephen Engel. Thank you. Well, coming up, 67 million U.S. viewers tuned in to watch yesterday's presidential candidate debate. But will there be another? That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now for a look at some of the other stories we're following today. Japan's ruling party leadership race formally starts today. 9 lawmakers have declared their intention to contest the September 27 Liberal Democratic Party presidential election, including 2 women. The winner will almost certainly be voted in as prime minister because of the LDP's majority in parliament. Former President Donald Trump says he is not inclined to have another debate with Vice President Kamala Harris, but left the door open to a potential second contest if it would be hosted by NBC or Fox News. Analysts and a CNN Snap survey suggested Harris won the debate on ABC on Tuesday. Nippon Steel is mounting a last-ditch push to muster support for its $14 billion takeover of U.S. Steel. The Japanese steelmaker sent its senior executive Takahiro Mori to Washington for meetings this week as the deal risks being blocked by President Biden. While Biden, Vice President Kamala Harris, and former President Donald Trump have spoken out opposing the deal, the view has been mixed among some lawmakers and steel union members. The U.S. and the U.K. are signaling they are open to Ukraine's request to use Western-provided weapons to strike deeper into Russia. Washington has so far opposed such a move, citing concerns it might deepen the conflict. President Biden is expected to discuss the matter with his British counterpart Keir Starmer when both men meet in Washington this week. And let's take a look at how markets are faring. Building on from some of the positivity that came through on Wall Street yesterday, we had a bit of a rebound for both the S&P and NASDAQ. The S&P ending the day 1% higher, NASDAQ up more than 2%, Nvidia back in focus again, up 8%. We are piecing together the details that came through from that CPI number. The core prints coming in slightly higher than market expectations, even though the headline number came through at 2.5%, the lowest since February 2021. So the markets took that as reasons for the Fed to cut interest rates next week, but only by 25 basis points, leaning more towards a 25 basis point cut over a 50 basis point cut. So this is the reaction in treasuries across the curve today, trading about 1 basis point higher. This as markets start to price out some of the rate cuts that were in the curve. Also keeping a close eye on the euro today, we have an ECB meeting coming up, and we will be getting that decision. Our next guest says that the central bank is poised to cut rates by at least 25 basis points. But again, lots of questions about how many further rate cuts we can expect out of the ECB later this year and possibly next. Will they provide some forward guidance? A big conversation about the ECB to come. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks track a tech-fueled rally on Wall Street, but there are concerns the Fed may be less dovish than previously expected following the slight rise in core CPI. And we will be watching out for the ECB decision due this afternoon. Israeli airstrikes continue in Gaza, with reports a UN school sheltering displaced Palestinian families is amongst those hit. The IDF says it was targeting Hamas militants operating from the school. Plus, China's deal makers in the crosshairs. Beijing turns up the heat on state-owned brokers, scrutinizing IPOs and detaining investment bankers. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, we had a bit of a roller coaster session for the S&P yesterday. At one point, it was down 1%. By the end of the day, we ended up 1%. So the first time it's had such a big recovery since October 2022, if you want to look at the stats. But what we did see is a bit of a tech-fueled rally. NASDAQ up more than 2%, Nvidia up 8%. Today, the futures are also leaning towards the green as well, about 10 basis points, 20 basis points, respectively. The euro in focus, we've got the ECB meeting coming up later today. We'll talk more about that. A 25 basis point cut is priced in, but I guess today is all going to be about what signals they give for the future. And then Brent in focus today, back at $71 as the market digests the impact of Storm Francine hitting the U.S. Gulf of Mexico. Flipping over, just a quick look at those inflation numbers that came through. The surprise was in those core CPI figures, but if you want to drill a little bit deeper, at the major upside risk there is coming from core services figures. So those came in at 2.9%. 6.9% annualized. So it's the services numbers that keep putting pressure on these inflation figures coming through from the U.S. Less so for core goods, which is in deflation territory, down 0.4%. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. It is a risk-on day. Avril.
It is absolutely. Look at the green that we're seeing in the region, led by the likes of the Japanese benchmark. Nikkei helped along by what we're seeing in the yen, a bit of weakness, a reversal of the gains from earlier in the week. But we also, as you correctly mentioned a short while ago, Jumana, seeing that tech-led rebound in this part of the world. Part of it is due to Nvidia's performance on Wall Street overnight, but you also have the likes of OpenAI reportedly headed towards $150 billion valuation. So AI investors in general in a really good mood, and you're seeing the chip names among those that are lifting Asia's stock gauge today to about the most that has jumped in about a month. And I wanted to highlight a couple of other things as well, because as you know, Jumana, the investor sentiment towards the Chinese markets has been really weak. And in terms of the levels we're watching on the CSI 300, we're about 2 points away from the February lows this year. And if it breaks beyond that, it might even be the lowest close we've seen since early 2019. Something to keep an eye on when markets return to trade after the break. Jumana.
But the takeaway really, Avril, is markets are back being excited about AI again. So long gone are the concerns that AI is a hype. All right, let's switch on and talk about some of the central banking news that we're going to get today. The European Central Bank will probably cut its key rate to 3.5% from 3.75% later. Bloomberg Economics also notes that support for a reduction comes from across the governing council spectrum. Our next guest agrees, saying the central bank is poised to cut rates by at least 25 basis points. Let's bring in Razan Hilal, market analyst at Forex.com. Good to have you with us. Well, the cut is pretty much priced in at this point going into today. So what are you watching out for?
Yes, so with respect to the latest decrease in the inflation levels from the Eurozone and from the notable drop in Germany's inflation towards 1.9%, so that's fairly below the 2% target from the European Central Bank, the 25 basis points is priced in the markets. And as we have the global energy prices as well, they are currently at a track for a notable drop. There's a high possibility that they are going to impact an overall cool down in inflation levels, which is setting a more comfortable stage for central banks worldwide to be able to proceed with their easing monetary policies. And that for the European Central Bank, as they are data-driven and meeting-by-meeting approach, the outlook for the European Central Bank is also expected to be with respect to the developing data that's going to be after the rate cut for today, and with respect to what happens after the Federal Reserve takes its decision with respect to its rate cut.
Yeah, I mean, we're entering into a global easing cycle as far as the major central banks are concerned. And when I think about what that means for currencies, it becomes a question of which bank is going to be more aggressive with the easing cycle. Where do you think the euro ends up? We're trading around 110 now.
That's correct. Now, the euro is currently facing headwinds with the strong dollar that is currently facing a strong support at the December 2023 lows. And that is because the market is widely pricing in only a 25 basis point rate cut magnitude. And it almost wiped out the possibility for a 50 basis point rate cut following the recent increase in the core CPI, the core CPI, and the increase in the non-farm payrolls for August. So with that, the euro is currently facing critical headwinds, and for the magnitude of the upcoming easing monetary cycle, similar to the way that major central banks are going, where they don't want to go in a very drastic direction, yet they're going to go about it data by data with respect to the developments of the economic indicators towards the year end.
So where does the euro end up in that situation? And you see downside risks?
So yes, there is a downside risk for the euro against the dollar, and that is also data-driven with respect to the upcoming indicators. And as the Fed proceeds with its easing monetary policies, it will ease off the tensions for worldwide central banks with respect to their implementation of their own easing monetary policies.
Yeah, well, there's one central bank that's standing out around the world now. Everyone else is talking about rate cuts, but the Bank of Japan are still in the hiking camp, and that's having a notable impact on the yen. Do you see the yen appreciation rate to continue having legs?
Yes, currently the dollar-yen pair is at a very crucial low, and that is primarily due to the divergence in the monetary policy with respect to the Bank of Japan. And we had a notable increase in the Tokyo's core CPI inflation last month, getting back up towards near the 2024 highs. And the Bank of Japan is comfortable with hiking rates, irrespective of where the current market situation is, but they are going to be communicating that rate hike to be able to avoid any market shocks across the market and the current state that they are in. And with respect to the divergence of a rate hike, with respect to overall central banks going towards a rate cut, we might see that difference probably spiking up carry trade factors on the horizon.
As the Fed start cutting their interest rates and begin the rate cutting cycle, is there going to be less focus on these so-called carry trades that people have been putting on?
Now, with respect to the divergence, with respect to the policies, there might be a hint towards the carry trades because the Fed is going towards an easing monetary policy and the Bank of Japan might go towards a hike. And we have other banks that are currently probably on hold, such as the Bank of China and the Bank of England. So with banks staying on hold and the Federal Reserve going towards an easing monetary policy, it might elevate the pressures across the economies and make different monetary policies and differences between the rates between the central banks.
Yeah. As we head into the last couple of months of the year, there are notable risks to watch out for. We've seen a few stumbles in the stock market. Of course, we have the big driver U.S. elections coming up, and many investors are saying that they want to be cautious on risk. We were just speaking to an equity investor now who was saying that they've taken their chips out of equities. What are you recommending for FX investors to do to navigate some of these potential speed bumps to come?
Yes, with respect to the uncertainty following the political ambience in the U.S. and with respect to the political debates that we are seeing, we have divergent agendas coming up between the two parties for the presidential election. And with respect to the dominant party, we have a different impact for the market with respect to the taxation, with respect to the oil sector, with respect to several sectors across the markets. And we also regard the gold metal as a safe haven regarding all this uncertainty as a haven for the markets that can be looked onto with respect to all this uncertainty and the fluctuations going on with the markets until the decisions and the agendas are set in place.
Yeah. Razan, thank you so much for coming on. Razan Hilal, market analyst at Forex.com. Well, coming up, the world's poorest nation gears up to fight the spread of mpox. So all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Well, as we were just talking about, the European Central Bank is expected to cut its key deposit rate by a quarter point today to 3.5% in a prelude to the Fed's first move next week, leaving a focus on the rate path ahead. So for a preview, Bloomberg's Lizzie Burden joins us from Frankfurt. Lizzie, it's great to have you with us. The market is sort of squaring in on a 25 basis point rate cut out of the ECB today. But can we expect any signs or messaging about what's to come later on? Any forward guidance?
Well, that's definitely the focus. Of course, everyone's hoping that Christine Lagarde will give us some clues, because it's not so exciting, the story about the cut, because as you say today, it's fully priced by markets, unanimously expected by economists, and you've had it pretty much endorsed by all of the ECB speakers, because you've got inflation receding and concerns about the growth outlook mounting. So we are expecting this quarter point today. As you say, the focus turns to the path ahead, and actually markets are more aggressive than economists about that. So economists expect a quarterly cadence of quarter point cuts from here on out, which would take the key rate to 2.5% by this time next year. But markets reckon they're going to squeeze in another cut perhaps at the October meeting. That will be the focus of the press conference. I wouldn't expect Christine Lagarde to give too much away, though, Jemana. She's been burnt by the experience of over-telegraphing that June cut. So I would expect her to stick to the language of data dependence and not committing to a particular rate path. Where you might get clues, though, will be in the forecast. Do they actually give a haircut to the growth outlook for 2024, which some would suggest would mean they should have started cutting rates a bit sooner?
Yeah. Lizzie, the challenge for the ECB here is they're in a very different position to the Fed in that services inflation still remains quite sticky, but at the same time, growth is slowing quite notably. Is that going to have an impact on how quickly they are going to be able to ease versus, say, the Fed, where the market has started to price in the possibility of these jumbo cuts?
Yeah, and think about it. We talk about the size of the cuts, but actually, if you look at the levels of interest rates in the euro area, the US, and even the UK, it's very different. In the euro area, we're much lower. And also, if you look at the economic pictures, very different. So Christine Lagarde talked about this summer of data that we're expecting. And if we do just dive a bit more deeply into it, as you say, yes, inflation is receding at the headline level, even at the core level. But services inflation is the concern. But perhaps that goes back to the Paris Olympics and it's more of a temporary effect. Actually, you had an important measure of wage growth easing in the second quarter, so that could give some confidence. But as I say, there are these recession concerns for some, at least growth concerns for others, and particularly a pain point coming from Germany. So there is division on the Governing Council, particularly about where that neutral rate lies, and it looks like policymaking is going to get even more hairy as we get towards that neutral rate, wherever it lies.
Lizzie Burden, live from Frankfurt. Always great to have you on our show. Thank you so much for giving us an overview. And do not miss our coverage of the ECB policy decision at 4:15 p.m. Dubai time and President Christine Lagarde's news conference half an hour later. Well, Burundi has started a national campaign to stop the spread of mpox. That's after a contagious subvariant of the virus spilled across its border with the Democratic Republic of Congo, where hundreds of people have died. But fears remain the world's poorest nation is ill-equipped to deal with a major disease outbreak. So for more, Bloomberg's Janice Q joins me from Johannesburg. So Burundi started a national campaign to stop the spread of mpox after a contagious subvariant of the virus spilled through the border, and the border, of course, with the DRC, Democratic Republic of Congo. Why is an outbreak of mpox in Burundi so concerning?
Burundi is equipped to deal with a major disease outbreak. As you say, it's the world's poorest nation. And one of the things that is particularly concerning about the outbreak in this country is that there's a high number of children that are showing this disease. The Africa CDC said that they think it may be that babies are getting this at a really young age in the maternity ward while they're nursing with their mothers. And then, of course, as soon as they're discharged and they go home to the families, the risk only gets higher. And so that is a big concern. We do not yet have a vaccine campaign in Burundi, and even the vaccines that are being rolled out in the Congo are not specifically focused on children. So this is a concern that the scientists are still scrambling to get more information about the transmission of this new variant, this K1B. And so there's a lot of questions there that need to be answered still.
Yeah. Well, a study has just come out about the effectiveness of the vaccine that Bavarian Nordic have been putting together. What does the study show, and why is it important?
The study it was done in 2022 in Canada. So there was a global outbreak of mpox in 2022 and 2023, which was on a milder strain. But the study is still important because it gives us a sense of the effectiveness of one shot. This is normally a 2-dose vaccine, but in 22 there was dose sharing, I guess is the word to use. They were trying to spare the number of doses that they had because there wasn't a big supply of the vaccine. And so this study looks at how effective a single shot is, and the answer was about 58%, which is moderate. The scientists concluded that it would still be a worthwhile shot to deploy, and that it could, in fact, prevent outbreaks and further transmission. The reason that that's pretty interesting in this situation is that we are probably going to be in the same situation in Africa. Shots have not been flowing freely, and I'm sure African countries are going to have to consider single-shot vaccine campaigns. It's also the first study that really gives a reference study against people who did not get the shots. And so a randomized control trial in scientific terms is your gold standard. We don't have that for the mpox shot, but this is probably the closest one gets.
Janice, thank you so much for bringing us that report, Bloomberg's Janice Q. Now, for a look at some of the other stories we're following, the Sudanese government is accusing the UAE of providing weapons to rival paramilitary force and prolonging a 17-month war. The UAE has called the allegations false and baseless and accused Sudan of refusing to negotiate for peace. The clash during a UN Security Council meeting came as its members voted to extend an arms embargo in Sudan's Western Darfur region until September 2025. Sudan plunged into conflict in mid-April 2023 when long-simmering tensions between its military and paramilitary leaders broke out. Zimbabwe is considering culling elephants for the first time since 1988 to feed people who have been affected by a crippling drought, a cabinet minister has said. It comes as the southern African nation has recorded its worst food shortages in 4 decades this year due to an El Nino-induced drought that has weathered essential crops. And Ghana says it will raise the amount it pays cocoa farmers by 45%, as the world's second-largest producer of the beans has yet to secure vital funding for the new season. Growers of the chocolate-making ingredient will now receive a little over $3,000 per ton in the 2024-2025 season, but that falls short of the level sought by the industry regulator. Ghana has historically relied on an annual loan to pay for seedlings, chemicals, and fertilizer to buy cocoa farmers' output. The nation's harvest has also been falling over the last 3 years due to bad weather, disease, and a lack of fertilizers. And coming up, Nvidia CEO Jensen Huang says relations with customers are tense as the chip maker struggles to meet demand. We'll break down the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Nvidia CEO Jensen Huang says the scramble for a limited amount of supply has frustrated some customers and raised tensions. Speaking at a Goldman Sachs technology conference in San Francisco, Huang said the company is experiencing strong demand for its latest generation of chips called Blackwell, but there are problems.
Delivery of our components and our technology and our infrastructure and software is really emotional for people because it directly affects their revenues, it directly affects their competitiveness. And so we probably have more emotional customers today, and deservedly so. And if we could fulfill everybody's need, then the emotion would go away. But it's very emotional, it's really tense. We've got a lot of responsibility on our shoulder, and we're trying to do the best we can.
All right, let's get more on those comments now and bring in our tech reporter, Annabelle Jewelers. A conversation between Jensen Huang and David Solomon. I would have loved to have been in that room. But what else did we learn from Jensen Huang? He's obviously the man of the hour right now.
Yeah, that's right. Really just a focus going into this conference was, would we get enough sort of insights into how that Blackwell system is performing? Because, of course, a lot of concerns around Blackwell have been down to what are the delays? Why are we not seeing those products coming to market as fast as had been expected? So that was the expectation that Jensen Huang had to sort of assuage investors' concerns and calm the nerves, really. But it seemed like he managed to do that. So in that speech, he said that the Blackwell is on its way. Demand from customers has been strong. And he also gave a big vote of approval, a voice of confidence for TSMC. Of course, TSMC is manufacturing most of Nvidia's chips, and he called it the best in its field. So in aggregate, that seemed to be enough because we saw Nvidia's share price rising off the back, the best move we've seen in about 6 weeks. And that sort of move also spread to other chip makers, not just in the US, but we've seen it today in Asian trading. Tech stocks rising quite strongly. Again, going back to what investors needed to hear, well, Bank of America was saying we needed to get more on the readiness, and it seems, as I said, we got that.
Yeah. Well, it's almost like the market is telling the tale of two chip makers. We've been talking a lot about Nvidia's fortune, but then today's big take on the terminal, we're talking about Intel, some reporting that we had put together about a potential shakeup of the company. So what can you tell us?
Intel has really largely missed out on the AI boom. And CEO Pat Gelsinger has had a very ambitious turnaround plan that hasn't come to fruition yet either. And the latest results, for instance, were pretty bleak. We saw them really missing Wall Street estimates for growth. We saw job cuts as well announced, huge share price drop off the back. And so we had reporting a couple of weeks ago that Intel was looking into some quite dramatic options to try, again, turn around the business. And that included splitting off the foundry business, listing it perhaps, scaling back multi-billion-dollar factory projects, a lot of different options. Those are going to be discussed this week because there's a board meeting that kicks off on Tuesday that's scheduled to go for 3 days. So, again, we'll be waiting for any sort of updates that we get from that. But Intel's future certainly looking a lot more challenged, especially, as you say, when you pit it against the likes of Nvidia.
Yeah, and the stock down so much this year, down almost 60%. Certainly something needs to be done. There's a lot of pressure on Pat Gelsinger. Our tech reporter, Annabelle Jewelers, there giving us the latest on Nvidia, which, of course, did climb 8% yesterday in trading, sparked by some of those comments that came through from Jensen Huang. But then more broadly speaking, we did see a positive session for equities in reaction to those CPI figures. The core number coming in slightly higher than expectations, so markets are now squaring on a 25 basis point rate cut out of the Fed next week. As we head into Europe, markets are all looking solid. Take a look at Eurostoxx futures. Wow, looks like it's going to be a very strong open there as we watch for developments out of the ECB. But that is it for our show today. This was Horizons Middle East and Africa. I'm Shimona Bersachi in Dubai. Stay with us for Daybreak Europe with Tom McKenzie. This is Bloomberg.